So you're thinking about moving here to Virginia, buy a house, but like anybody else, obviously if you can pay less money for that same house, you're going to be happier. One way to save that money is to have a lower interest rate on your mortgage. So today, that's exactly what we're going to talk about. I'm going to tell you exactly what I did to save 1.4% on my mortgage interest rate. When 30-year conventional loan rates were 5.55% on average, I was able to get a loan for 4.15%. Now before we continue, my name is Paul Kim. I am your local Nova real estate agent. And for the sake of today's video, that's literally all I'm going to be. I am not a mortgage lender. I am not a financial advisor telling you what to do. I'm just telling you a story about what I did specifically in my specific situation when we bought here in Northern Virginia. And maybe as you listen to that story, you can have some ideas about how you could potentially save on your mortgage rates as well. So let's get into it. How the heck did I save 1.4% on my interest rates? The first thing that we did is probably the easiest thing that we can do, but sometimes for some reason we don't do it, and that's just shop around for different lenders. Our guy, I won't disclose his name or what bank he's at, when we worked with him, while the conventional 30-year loan rates were at 5.55, he actually started us at 5.2. That just goes to show you that not all lenders are created equal given your specific situation. So make sure when you talk to different lenders that you are doing just that, talking to different lenders, telling them about your specific situation, because some might be able to get you better rates than others. And make sure you know the right people or know the people that know the right people. The second thing that we did is we made sure that we were able to put down a little bit more money than the average 20% for a down payment so that our interest rates could be dropped even further. Now I understand it's a little bit easier said than done, but there's really just two simple ways to do that. One, save up more money for a down payment, maybe delay buying a house just a bit until you can get to that 30% down payment. Or two, buy a house that's a little bit under budget so you can put more money down. Why is that important and what kind of difference could that make? We were able to drop that from 5.2 down to 4.95. Now the third thing that we did, you guys might not like this one, is we actually did not get a 30-year conventional loan. And now before you start throwing things and be like, hey, he's cheating, he didn't get a 30-year conventional loan, blah, 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 blah. Hear me out, because you might actually learn something from this. What we did was we got a 10-year ARM loan. If you're not sure what that means, go look it up. It basically means that you're locked in for a particular rate for 10 years, not 30 years, 10 years. And then after 10 years, it's going to be adjustable, in which the interest rate could go up or it could go down. Now that might scare some of you guys for a good reason, because there is a little bit of risk involved. What if you lock in this interest rate for 10 years and then after that it skyrockets? It could. But now for us, the reason why we chose to go with the 10-year ARM instead of a 30-year conventional loan, in my experience with my family, we haven't stayed in a single place for nearly as long as 10 years. So realistically, as much as I want to stay here, chances are I'll be out of here in 10 years. I might actually be selling the house before then. Who knows? And so for us, locking in for 10 years just makes sense. And if for some reason we decided that after 10 years we're going to stay here and the interest rates skyrocket in year 11, we could always have the option to refinance it. Now remember, this specific loan made sense for us. It may not make sense for you, but it might. And for us, choosing the 10-year ARM instead of a 30-year conventional loan, the mortgage rate dropped from 4.95% all the way down to 4.375. Huge difference. Number 4, we were actually able to get a previous client credit. Now the interesting thing about my particular situation with this lender was I actually was not a previous client, period. So I don't know why he gave it to me. Maybe he just liked me. I don't know. But that goes back to what I was saying before, is if you find the right lender, you're going to be able to get these benefits. If you know the right real estate agent, they might be able to get these benefits for you. Point being, that previous client credit gave me an extra 0.125% discount on my interest rate. So from 4.375%, another drop, 4.25%. Number 5, we were able to get an additional discount because we were able to create a banking relationship with this lender. It's not going to work for every lender, but for lenders that are banks, this one happens to be a smaller bank, you're able to get this banking relationship discount if you have other accounts open with the bank. Now, a lot of times what that's going to look like is you're putting extra money into other banking products that they have. You might have to open up a checking account with them, savings account, CD, investment account, variety of different things. But if you open up another banking product or account with the specific bank that's lending you money for your home, they're going to give you an extra discount on the mortgage rate that you qualify for. Now for us, because we were moving across the country from California to Virginia, my wife was leaving her work, we were actually able to roll over her old 401k into an IRA with this new bank, therefore qualifying us for another 0.1% discount, which dropped us all the way down to 4.15%. In summary, those are the 5 things that we did for us to save 1.4% in our interest rate, all the way down from 5.55% across the board nationally for 30-year conventional rate to what we got, a 10-year ARM with various discounts for 4.15%. How much is that going to save us over the period of time that we're paying off our mortgage? Well, I'm not going to tell you, but it could save you a lot of money in whatever you decide to do with your mortgage payment as well. So make sure when you buy a house, you're talking to the right people, getting connected with the right lenders, and making the right decisions on which loan fits your specific situation. Because that mortgage rate, even if it's just 1 or 2%, it's going to save you a lot of money. So hopefully today's video was helpful for you. If there's anything else that me and my team can do for you, don't hesitate to reach out by calling, texting, or emailing, or Instagram, or YouTube comment, or whatever, and we'll get back to you as soon as we can, and we're going to serve you the best way possible. Thanks for tuning in.